90% of all silver that's been mined is gone. It's in waste dumps, it's in the ocean, it's gone. 90% of all gold that's been mined is still sitting on the surface in vaults, in hoards, and so on and so forth. So, silver is very much a depleting asset because, in this cell phone, like, my little Apple here, there's about $2 or $3 of silver in this thing. And to take it out, it would cost a fortune because Apple is very good at embedding that silver into that circuit board. And there's not too many technologies out there that can extract it in an economical way. It's absolutely almost criminal that we sell silver for $25 an ounce today.
Silver is an important metal not just because of its shiny and attractive appearance, which makes it great for making beautiful jewelry and accessories, but also because it is highly conductive, which gives it many industrial uses. However, the quality that makes silver most attractive to investors is its relative scarcity. Data from the US Geological Survey suggests that approximately 1.74 million metric tons of silver have been mined worldwide. At least 90% of that has been lost forever, a phenomenon First Majestic CEO Keith Neumeyer says should contribute to significantly higher prices for the precious metal. According to Neumeyer, silver's real value is worth at least $100 per ounce. In previous interviews, Neumeyer explained that the global market is currently in a 2000-style bubble, which is why the mining sector is not performing as expected despite recent price rallies for both gold and silver. However, Neumeyer believes it's only a matter of time before the bubble crashes, and investors begin to seek protection in the commodities space like they did after the dot-com bubble burst. When that happens, the First Majestic CEO says commodities will witness a big price rebound, possibly bringing silver prices to at least $100 per ounce, a 252% price increase. Another reason Neumeyer is bullish is the wide gap between the world's silver demand and the paltry available supply. For years, the Silver Institute has reported deficits of millions of ounces for the precious metals. In 2021, the organization reported a deficit of 81 million ounces, followed by a larger deficit of 253 million ounces in 2022 and 184.3 million ounces in 2023. Though the deficit was lower in 2023, annual silver demand hit the second highest year on record, with a total demand of 1.27 billion ounces. According to its latest data, the global silver deficit is anticipated to reach 215.3 million ounces in 2024, spurred by a 2% growth in demand and a 1% drop in supply. This is why Neumeyer is so bullish on silver prices in 2024. As we present clips from his recent interview with Milton Todd Alt III, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos. Thanks, and enjoy the video.
I love technology, and I guess, being, the founder of a copper company, I learned the importance of, metals in technology. And in the early 2000s, when I was looking at silver, I realized how important it was in the whole scheme of things when it comes to, what we do. Whether it's computers or cell phones or automobiles or refrigerators or fridges or pretty well every single device that we need as the human race consumes silver. And I figured that was not going to change. The difference back then was there was no electric cars or solar panels. Now today, we have two industries that are consuming 30% of the world's supply of silver, which didn't exist 10 years ago. So last year, the human race consumed 1.2 billion ounces of silver, and the miners produced 820 million ounces, and only about 100 and some odd 50 million, 125 to 150 million is recycled. So there's this huge deficit of somewhere between 200 and 300 million ounces last year, and that's been going on now for 6 years in a row. Consumption this year, 2024, is expected to be about 1.4 billion ounces. The miners aren't going to produce anymore. Miners are 820, call it. And recycling's not changing much because recycling doesn't pay. There's no money in it. So the deficits continue. So that has to affect price eventually. Silver trades 1 billion ounces a day in the paper markets. So we call, let's say there's 320 trading days in a year. So that's 320 billion ounces of silver trade in the paper markets per year. The miners produce 820 million a year. So the leverage, do the math. That's like what, 400 to 1 or something like that? For us, we're, the leverage is crazy. So that's why we open the mint, because for us to take our production off the market, and you do that math, for us to take 10 million ounces off the market, just for easy math, that's equivalent of taking 3 billion ounces out of the paper market.
Yeah. Doesn't make sense to me, though, because if you have a demand that's greater than what you're mining, how's the demand being met? Keith, how's the demand being met if you have a demand that's greater than mining?
It's a big question. And, that's why I criticize the Silver Institute, because when we're not members, I canceled our membership of the Silver Institute a few years ago because I'm so displeased with the data that they publish, because, that's a very valid question. I would love to have answers myself. I remember when Putin was, in the gold vaults in Russia, when he was holding, his gold bar. This is like, I guess, 4 or 5 years ago. And, a pretty famous photograph of him inspecting the Russian gold hoards that they've been buying over the last several years. And so he's standing in the vault, and I zoom in on the photograph, and along the back wall, there's this whole line of pallets of silver bars. And I go, wow, there's a lot of silver there. So, and they don't report it. So, is that where the silver's coming from? I have no clue. We know China's not exporting silver. It's against the law in China to export silver. We know in India they're buying silver. They're big consumers. So it's a very valid question, and it's a very secretive industry, and we don't have an answer.
Many financial commentators and analysts believe silver prices should be way higher than they are now. However, higher prices remain elusive primarily because the silver market is heavily manipulated and prices brutally suppressed. During the interview, Neumeyer provides a detailed account of the extent of market manipulation in the silver market and the role of big commercial banks like JP Morgan in the entire affair. According to Keith, these banks act as middlemen between mining companies like First Majestic and companies that need the metal for industrial purposes. As a result, they receive millions of ounces, which they can then multiply into billions in the futures markets. Creating so many paper contracts inflates the available supply and suppresses prices, allowing banks to continue their manipulation. Unfortunately, exchanges like COMEX and organizations like the Silver Institute only contribute to the issue by not being entirely honest about the situation. Let's get back to the interview.
If you're Sony or Tesla or BMW, doesn't really matter who, and you need to have 20 million ounces of silver for your product that you're producing in 2024, you're going to approach the big traders, which is pretty well JP Morgan or HSBC or whoever they are.
Yep.
And you're going to sign a contract for delivery of those ounces, and you're going to tell that bank to deliver those ounces to whatever port that they need to be delivered to. So as a miner, we sell our ounces through a trader to the banks. The banks know how many ounces they're going to be getting because they know the market quite well. Of course, they leverage those in the paper market because they're shorting against that purchase. So Sony buys 20 million ounces, they leverage that up 300-400 times in the paper market. And it's in their best interest to not allow that spot price to change that dramatically, because all of a sudden, and that whole run in 2011 from $40 or call it 35, depends on who you listen to, but $40 to $50, that was all short covering, and the banks were in super stress during that period of time. There's talk about that's why Bear Stearns, I think it was, or whomever ultimately went bankrupt because of their big paper derivative position on silver. Whether that's true or not, who knows? But there's lots of information on the internet that you can find, that discusses that topic. There's a big short position in the market, and it's all held by the banks, and it's all because silver is a very commercial market, and it's very thin. And then so these guys in these are young 30-year-old MBAs out of college that have no clue about, the supply and demand fundamentals of the metal, yet they've been shorting silver for the last 30 years. But, they don't know that the above ground supplies of silver back in the 80s was 5 billion ounces. And back then, there was no electronic uses. Electronic uses just started coming in. Today, the above ground supplies are about 1 billion ounces, and it's all in ETFs. So all that above ground supply has been eaten away in electronics. And and no one's recycling cell phones or computers. All that computer waste is just thrown into dumps. These are numbers that we talk about within the industry and they're not exact, but 90% of all silver that's been mined is gone. It's in waste dumps. It's in the ocean. It's gone. 90% of all gold that's been mined is still sitting on the surface in vaults, in hoards, and so on and so forth. So, silver is very much a depleting asset because, in this cell phone, like, my little Apple here, there's about $2 or $3 of silver in this thing. And to take it out, it would cost a fortune because Apple is very good at embedding that silver into that circuit board. And there's not too many technologies out there that can extract it in an economical way. So no one, recycles computer waste. And that's where a lot of our silver goes. And so it just, gets, put in waste dumps, unfortunately.
Fortunately, the days of price manipulation may very well soon be behind us. Over the past year, many financial experts and analysts have predicted that the current global monetary system cannot possibly last for much longer. Everyone, even those who do not invest in gold or silver, is predicting an impending collapse of the fiat system. And they all agree that such a collapse will make hard assets like gold and silver very valuable and wildly sought after in every corner of the world. Please share your thoughts and comments on Neumeyer's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching our videos.